Venture funding felt the pain in the first quarter, according to new data from Crunchbase. And despite a couple of massive deals, global VC funding fell 53% as investors continue to hold on to their dry powder. And for more on what this means for investors as we start up the economy here and for the startup economy at large, let's get to Yahoo Finance's Ali Garfinkel. Ali, what are the details on this funding drought?
Yeah, the headline looks bad, Jared. It does. And that's because it is bad. And if you dive deeper into the data also looks roughly as bad. First things first, why, right? First, that decline that we're seeing, that 53% decline, actually is despite a number of those huge deals, right? You have the included reported $10 billion investment in OpenAI, for example, that's largely Microsoft. You also have Stripe's, I believe, $6.5 billion funding round included there. So that's billions that are included in there, right? Yep, and Sandbox at $500 million. So those numbers didn't move the needle as much as one would want year over year. Beyond that, even by stage across the board, funding is down. And it's the one number I want to pull out for you is actually a 44% decline. And that's in seed stage companies. Now, seed stage companies, I can't talk today, seed stage companies, they can sometimes be more resilient in tough times, right? Smaller checks, a larger universe of companies and investors. However, that's not what's happening here at all. Frankly, I was surprised by how bad some of these numbers look. Now, what can we attribute this to, right? Of course, there's the macroeconomic environment of 2022, which was dicey to say the least. We've gone through the laundry list on the show many, many times, right? Whether it's high interest rates, the war in Ukraine, supply chain problems. And we may not be at the bottom of this cycle, we don't know. But what we do know is actually the collapse of SVB it was a shock to an already difficult environment for a lot of these startups. It's important to say SVB was a really key partner for a lot of startups. I believe it had more than 20,000 startup depositors with 5 million or less in the bank. Wow. So it's the sort of thing, it was another shock, it was more mounting concerns for these companies. So that said, capital exists, right? The problem is not that capital doesn't exist, right? At the end of 2022, I believe Crunchbase said that it has, private investors are sitting on $580 billion. So something's got to give here is the bottom line. The question is when, what, how, what's the right time for a lot of these investors? And I think we don't know the answer to that question yet.
So of the capital that still is getting dispersed to one project versus another, what's the type of industry or sector that those dollars are still being invested in founders and some of their entrepreneurial visions as well?
Yeah, fintech is actually still getting some money. Okay. That's something that's still happening, which is, really good news for fintech. The other thing too is healthcare is also getting quite a bit. That said, it is across the board. And those seed stage companies, though they are struggling, they are still doing quite a bit better than some of the later stage companies where those rounds are bigger, it's harder. So the money is still moving around. It's just not moving around en masse. It's not moving around, frankly, the way I think a lot of people would like to see it be moving. A lot of it right now is what I'm imagining is a bunch of people just sitting with their bags of money waiting for the right time to say, this is when we're deploying capital. That day just
very Monopoly-esque.
Yes, I don't know why I have a Monopoly vision of it.
There's a guy in the top hat making all the decisions.
I knew it.
It's the best piece.
I knew it. That's what I've learned in financial journalism for 5 years.
All right, between the top hat and the thimble, those two solid Monopoly pieces. Thanks so much, Ali Garfinkel, breaking this all down for this VC trends that we're going to continue to watch as well. Appreciate it.